Gold and silver forecast: softer CPI fuels rebound, but oil keeps inflation risks alive. Precious metals found some relief after the latest U.S. inflation data cooled expectations for future Federal Reserve rate hikes. June's headline CPI ticked down to 3.5%, while core inflation moderated to 2.6%. Although this prompted a brief relief rally in gold and silver, both metals remain capped by technical resistance as rising oil prices keep long-term inflation risks on the radar. Gold technical forecast: $4,200 resistance caps the CPI rebound. While spot gold edged higher following the CPI print, the recovery stalled below critical resistance at $4,200, keeping short-term bearish pressure intact. The bearish case: as long as gold remains below $4,200, the path of least resistance points lower. A failure to reclaim this level could pull prices down to $3,950, with a further breakdown risking a slide toward $3,800. The RSI hovering near its midline suggests a period of choppy consolidation is likely. The bullish case: a decisive daily close above $4,200 would signal a rapid rally to $4,350, testing the black dotted trendline near $4,370. The bigger picture: gold has been carving out a descending broadening wedge pattern since its April 2025 highs. To completely neutralize this medium-term bearish structure, buyers must force a clean breakout above $4,500. In the very near term, clearing $4,250 would break the local descending wedge and open the door to that $4,500 target. Silver technical forecast: $55 support faces breakdown risk. Spot silver is compressing inside a tight range between primary support at $55 and overhead resistance at $64. The key support zone, $55. This remains the line in the sand. If silver fails to mount a recovery towards $64 soon, the probability of a breakdown below $55 will rise. Buying opportunities below $55: a clean break below $55 will target psychological support at $50, potentially dragging silver into a major long-term accumulation zone between $45 and $55. Historically, this zone represents a highly attractive buy-the-dip opportunity for long-term investors aiming for an eventual pushback toward $90. Short-term resistance hurdles: on the 4-hour chart, silver remains pinned under a descending trendline stretching back to the May 2026 highs. Reclaiming $60 is the first step, which would open the door to $64. A sustained breakout above $64 is required to trigger a broader trend reversal toward $72. With the RSI still languishing below the midline, near-term momentum remains firmly in the bear's favor.